All right. Good afternoon, good evening, everybody. It's Mike. It is Saturday, the 29th of December, and tonight we have a free webinar, and I want to talk to you today about looking to 2019 and kind of give you what I'm thinking about, some thoughts going through my head, and my game plan, which is a very flexible thing as we go into New Year. So I hope that sounds useful to you. The last two webinars I think were very useful. By the way, they're still relevant. So the one on China and the one on the Santa rally, you can check those out. If you're looking to get in touch with me, you can email me at mike@smartoptiontrading.com. Best way to get a hold of me is on Twitter. If you follow me on Twitter at OptionsMike, I post a lot of stuff out there that's not included in my service for free. If you guys who know me well enough know I'm always talking to you guys, throwing stuff out there, thoughts, ideas, and stuff out there. Yeah, it's the fly fishing video. Thanks, Chris. And of course on YouTube, you can get me at youtube.com optionsmike. That's where I'll upload all my webinars and free videos and stuff so you guys can watch them from there. All right, you guys ready to get going? Who wants to go do some fly fishing? Actually, I'd like to go skiing, but around here it's been nice and warm. All right. So, risk disclaimer. Day trading, short-term trading, options trading, and futures trading are extremely risky undertakings. They generally are not appropriate for someone with limited capital, little or no trading experience, and/or a low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risk, and you can lose your entire investment. No trades are recommendations or advice. We cannot be sued for loss of capital. All trades are for educational purposes only. Contact your broker or RIA for execution, margin, and other capital requirements. Everyone watching this presentation adheres to all disclaimers from alphashark.com and myself, Mike Pisani. Snowing in Idaho, Harry? Oh, that's nice, man. It's we had 60 degrees and 3 inches of rain again yesterday. Yuck. It's winter. We're supposed to get snow. Okay. So looking at 2019, then we'll go over market sentiment. We'll have a joke about institutional flow, and then we'll do some charts. I hope that sounds good for you guys this morning. For you guys joining late, welcome. Welcome, Don. Welcome, Don. I've sent you a couple emails. Try to direct message me on Twitter. You weren't responding to my emails. All right. Looking at 2019. So the first thing you think you got to kind of ask yourself this question is, what type of market are we in? And, you need to take a look at things and think about that before we can really decide how we want to trade for 2019, right? So what do we know? We know that we have now had a 20% pullback in every index, right? The SPY's corrected 20%. The Dow's corrected 20%, the Q's has corrected 20%, and the IWM's corrected 20%. And some of them have gone absolutely further than that as well. But we know that that's going on there, right? So by definition, we've entered into bear market territory, correct? Anybody disagree with that? Okay. We have a sustained period of higher volatility. Okay. What does that mean? Is that we went from a period of from 2016 through 2017 of extremely historically low volatility, right? The VIX was hovering under 12 most of the year, would quickly move above it, come right back down, would get into the single digits at times. So we have now entered a period of higher volatility where instead of being down low, we are now in a period where the VIX is hovering up close to the 30 area and has sustained now for 3 months an area, a move above the 16 level, right? So this is a change in character. We know this is different from the last 2 years. And then we have the press, right? And the press is out there now, and they are beating the bearish drum. CNBC is out there now. CNBC is out there now talking about markets in turmoil, running their special out there, right? What do we get? How many people have seen this before? What happens when they run this? What normally happens with the markets when they run that? You guys who pay attention out there, right? Typically, by the time they are running a special like this, the market's trying to bottom, right? They always seem to be late to it. Not that they're not extremely bearish and stuff like that. They're late before they run that. But we have that. That's running now when this is all going on. Very quietly during this market, I don't think a lot of people realize that the SPY, the P&E hit 21 plus, got almost to 22, right? It's now cooled back into the mid-teens. Fund owners don't like to own stuff when we get a high PE on the index, right? So all we've done is we brought the S&P back to a reasonable level. Does this make sense to you guys? I think a lot of people are losing this fact in what's going on out there. And I hear so much negativity. I hear so many people screaming the market's going to crash and this. And we've had a very, very controlled pullback in this market, have we not so far? Has there been a lot of panic through this? Has there been, just panic selling where we're dropping like a rock with nothing to be found for the most part? Overall, in general, this has been a very, very typical sustained pullback. And the one thing I could characterize this better than anything else is, especially during the last week and a half up until this week, we had a buyer strike. There was just no buyers to be found. They weren't buying into this market, right? Now, if you're a fund manager coming into the end of the year and you've had a good year, would you be buying the market right now? Would you want to potentially risk your bonus or job or ruin your nice profit and loss in the last 2 weeks of the year in a market like this? I agree. Probably not, right? So there was very little incentive for them to buy stuff here this year. Unlike other years where they're playing chase or they're trying to mark things up or they may not have had a good year. By the way, that chart down there is a 5-year look at the S&P and 500. So we'll go over that a little bit more in detail, but just trying to put it into perspective. That green line is the 200-day on the weekly chart, so the 400 on the daily. Notice we hit it and we bounced right off of it, all right? Bounced right off of it. All right. So what kind of market are we in? We've entered a bear market, guys. I'm not going to beat around the bush. I'm not going to say it. We've entered into a bear market. Okay? That doesn't mean we're going to crash. It means we've entered into a bear market. Volatility will remain elevated until it starts to come in, right? Until we find a bottoming area. There will be bounces, but overall the trend will be slowly down or maybe fast depending on what's going on. But we've entered into a bear market. And, this happens, right? This happens after long runs. Another 4-letter word. Well, there's more. There's nothing bad about this. Everybody's like, this is the worst since 1929. This is actually very healthy action so far. It's just tough to trade. But it's not really unhealthy action here. All right. So how are we here and what's going on? Let's talk about this a little bit. So one of the reasons we're here is the ongoing trade war with China, right? We can talk about a lot of things, but that is absolutely playing into this. If you notice that every time we have China news, the algo sees on it one way or the other. They move back and forth still. You have two of the world's largest economies are slowing down because of this as they beat on each other. So this is, one of the real reasons we're here is there's just uncertainty, right? We always talk about this. The market hates uncertainty more than anything else. Yeah, Don, I mean, you're right. There was mostly computers last week. Most of the big guys are on vacations. But there was some big buy programs that ran during the day a couple times last week as well. That wasn't necessarily by computers. That was somebody saying to buy there at that point. Somebody had to tell them to do that. So trade war is bringing us here. We had the longest bull market in the history of the stock market. You're due for some type of correction, consolidation, and rest, right? We can't just go straight up in a line all the time, right? If the markets go up like a parabolic stock, typically they're going to come down like a parabolic stock. We talked about the P&Es were getting hot. They needed to come in to cool off. And another really big reason for all this, guys, if you were to ask me, is you have a lot of political instability. We're all, for those of us here in the United States, we're very much aware of how much is going on politically. And, we have a president that is extremely active on social media and and press conferences. We have unrest and uncertainty in Great Britain. Same thing in France. We have, other countries are facing the same type of issues. Israel's facing a challenge to its leadership as well. There's a lot of political instability right now around the world and in the bigger economies, right? Yeah, that's it, right? Michael, markets don't like news-driven, right? They're usually news-driven, and there's a lot of negative news out there right now taking a hit. The other big thing that's going on is the Fed is removing the punch bowl, right? It's not just about the interest rate changes. What else is the Fed doing? Right? The Fed is about to do the biggest unwind, all right, of bonds, right? For not the front, quantitative easing is in the process. They're starting to unwind QT. So this is a huge thing that they're not sure. There's a lot of uncertainty. How is this going to play on the market, right? They're going to be selling bonds. They're going to be selling a lot of bonds, right? Doing a lot of stuff. So, we have a lot of uncertainty, and this is how we've gotten here. So you have to kind of understand what are the ingredients coming into this market. When I look at this market, though, these are things that we can understand, we can look at and say they're all kind of coming together here into this. With me so far? All right, so let's talk about the R word. What's the R word? And I'm not an economist. What's the R word that we keep hearing everybody out there screaming about? Yes, recession, right? Everybody's talking about recession. So I'm not an economist, guys. So, I don't know. But I do know this. Growth is slowing, but that's not unusual after a huge run, right? I've been trading these markets for a long time. This is not unusual. This is something that comes along. Companies are still hiring. Companies are still raising wages. Unemployment's at a record low, which I know, record lows here. There's a lot going on that is still good around the world and in this country specifically, all right? The bears are growling. They're out there trying to create fear, spread fear. They can bring them on double four-letter word, on a CNBC, and they get to talk, we're going to crash another 20% from here. Most recessions are the result of some type of crisis or bubble. Do we have a bubble here right now? I would say that the way this market is selling off is preventing a bubble from happening. You think we have a bubble, Sean? Where's the bubble? What's it in? I don't see a bubble. Debt bubble? Okay. Yeah, but that's a lot. There's a lot of that out there, but I don't see. I don't know. I'm not sure that's going to be the issue. So, a lot of debt being held. For me, guys, I don't see the same stuff we saw going into the financial crisis or the dot-com bust or anything like that. I think the market's cooled itself off enough to get out of the way of that. Okay? For me, my view. A lot of interest rates and buying back a stock, yeah, all that. Could we have a crisis? We could have political crises here, right? We could have some political instability. That is definitely something that could take place and play into this marketplace. But do we have a bubble? I don't see one right now. Is there a lot of corporate debt? There's a huge amount of corporate debt, but earnings remain good, and everything for the most part remains very good out there. Consumer confidence remains high. Inflation remains in control. We'll see. Here's something else to know. Typically, if we're not in recessions, markets will recover less than a year. So when you get into a bear market and you have a pullback like we've had, 20+%, if there is not some type of recession, typically a year from now, the markets will be back at or close to all-time highs. So if we don't enter into a recession, you should look for the market to bounce back sometime this year. Does that make sense to you guys? David, yeah, lots of corporate debt. Lots of corporate debt out there. I watch HYG religiously. It's been one of the, for me, HYG is always the canary in the coal mine, right? That usually rolls over before the markets do. It's usually the warning sign. and there's a lot of it. But a lot of it's with names that are in big trouble, like a GE, right? GE we know is in trouble. The big names out there in the tech area, while they have a lot of debt, they're not in trouble at the moment. So I'm not overly concerned, but I am concerned. All right. So this is something I want you guys to think about. If we head into a recession, everything's off the table, right? But if we don't go into a recession, typically we should look at next year and say, at the end of this year, and say we should be back, if not at, close to all-time highs again. That's an encouraging thought. If it holds place, we'll see. All right. So let's look ahead now, okay, to what's about to happen. So short term, Monday is the 31st, right? Monday's the 31st, and it is the last trading day of the year, and unfortunately it's a full trading day in the markets, which nobody really wants to be around for it. Historically, it is not a good day in the markets. Historically, there's a lot of last-minute tax loss selling and profit taking. Will this be the same as it is? I don't know, but I just want to put that out there. Markets are closed on Tuesday. We come back on Wednesday. And what happens on Wednesday morning? Most is done, but again, go look back at New Year's Eve the last 4 or 5 years, Michael, and see how they've traded. The slate is wiped clean, David, right? It's a new day, and we have a lot of mutual fund money that comes into the market, right? First day of the year, mutual fund Wednesday, January effect, that comes in. That's usually an early thing. Window dressing is already done. So, that's on my mind. The other thing that's on my mind as we start January 1st is it's going to get very, very, very noisy. And what I mean by that is China trade talks are about to get very hot and heavy. And we can expect a lot of news and algo-driven events on that. We have a March 1st deadline. That means these guys have already wasted 30 days. They're down to 60 days to get this done, right? So they have 60 days, and so right now in the media, they're both talking nicely to each other, which is a wonderful thing. I think there was even something out there this morning I saw by President Xi in China saying he wants closer relations or something like that. This is good. Yep, we're going to have a meeting sometime. They haven't given us a date yet, but in early January. Early January is next week, so hopefully we get some dates soon. But that's going to get really, really noisy, okay? We have a new Congress coming in. The new Congress comes back to work on January 2nd. The Democrats now control the House. It's a change. So there's going to be a lot more noise. We have the ongoing government shutdown that's in effect, and both sides are digging in. We'll see how much longer this goes on for. So we have that as well. And not to get political, but we do have the Mueller investigation possibly reaching its climax. We know it's been going on now for 2 years plus. There's news. There've been a lot of reports that he's writing his final report. We don't know how that's going to play out or what that's going to bring. But the honest answer is that could get very noisy in the markets here over the next month or month and a half or so. And on top of that, Brexit is heading towards its deadline, and we have turmoil there as well. CMT designation? What do you mean, Sean? Sorry, I'm not following you on that one. Yep, Italy and Europe problems. The other thing we really got to pay attention to here is the Fed. This is the anticipated Fed calendar for the year. This is what they're coming up on. All right. So we have a Jan meeting, then the big one is going to be March. Everybody's going to be focusing on that March meeting to see if they raise rates again. Okay. Nobody expects them to raise in January. What we'll be looking for on that January meeting is language. Oh, a certified market technician, son? Does it make you a better trader? Or I don't know. I mean, if you know the knowledge, does it matter whether you have a certification next to your name or not? I'm not sure I follow you. You can hit me up directly on that one if you have a question. I don't think it makes you a better trader. I think it just makes you more knowledgeable. Maybe you learned some stuff you didn't. Anyway, so we have a lot going on. The Fed is going to be in focus big time. We had, news that Trump was considering firing Powell, then that was later disputed at this point. The market's going to be very, very, very controlled about that. Well, Trump's not supposed to have control over Powell, guys. Some of you guys are bringing this up. The Federal Reserve is supposed to act independently and do what they think's the best. It's not, the president is not supposed to be out there talking about how unhappy he is or telling them what to do. This we never have had this before. Now, personally, I miss the times when the Fed wasn't important, right? Don't you miss when we didn't have to worry about the Fed constantly coming out and talking and all these guys talking and wheeling them out? We could use a lot less Fed in our lives at this point. All right. So these are some of the things that we're looking ahead that's going to heat up here. So we're going to have a lot of China news probably starting next week. Congress and a lot of stuff with Mueller, and then the Fed. The Fed's going to be very, very, very active. Yep. Powell doesn't want to make. They shouldn't. The Fed's not supposed to be making decisions on political pressure. They're supposed to be independent, looking out for what they think is best, not what's politically best for the administration that's currently in power. So my plan for next year, guys, very, very simple. I'm keeping it flexible, but this is how I'm going into next year. I want to continue to trade the stronger names on bounces. So this week I traded AMD, Microsoft, Micron, Square multiple times on most of those. On bounces, I would grab some of that, make some money, get out of the way. Other names that you could have traded easily this week were Amazon, Netflix, and Cat. They all were very, very strong. Keep an eye on these strong names. They will give you clues to what's going on in the marketplace and places you can go put your money. Also, some people here in my service, they've been playing them all left and right. Keep an eye on these strong defensive names. Look at charts on Procter & Gamble and Merck and Pfizer and Lilly. They all been showing relative strength through this process and even at times going and making highs during this, okay? So my goal is to keep playing the names that are strong. I'll look for flow wrapped around them, especially that gives us an idea that maybe they're trying to move them on that day and move forward with that. I will use short instruments when appropriate. So one of my favorite ways to trade the market short, because I'm a horrible short, I keep trying and I keep working on it, but I'm really not the best short in the world, and I know some people are much better at it, is with VXX. I like to go long the VXX when the market gets weak. It's a volatility, it's a play on weakness. So I will continue to use that as my primary means of shorting the market. The other thing you can do is obviously you can go out and buy puts on the SPY, the Qs, the IWM. They're all paying huge right now because with volatility, what happens when we have volatility, right? What do we get? A larger what type of what in the markets on the indexes? Yep, Sean, food grains, Clorox, good too, exactly. Not just premium increase, KM, but you get, if you look at a chart of the SPY, right, you have an increased range. We get bigger travel ranges on a daily basis on the indexes, making options much more profitable, right, especially puts on stuff like that. The nice thing about puts is when you buy puts, usually what's going up at the same time if the market's going down? Volatility, right, Tony? So you're getting a double hit, right? Unlike when you buy calls in this market, volatility starts dropping. You're fighting volatility at the same time. Okay, so they're working. The other thing that's working is very, very out of the money puts and stuff on the big names like Amazon and Netflix are working very well. But pretty much anything short's working when you get the moves. What about inverse trade funds? You could trade those as well, Kerry. I don't generally trade them. I usually use VXX, but you could use things like the SQQQ or whatever you enjoy. Just remember, those inversed funds, the leveraged ones, they're leveraged, and you should not trade them more than day trade them. Be careful holding them overnight, right? They decay rapidly, and they move against you very, very rapidly, okay? So that's it. The other thing is recognize support, oversold conditions, like we talked about coming into this week, that we had a massive, massive oversold condition coming into this week. Recognize when we get there and look for a bigger bounces like we had this week until we get a change. You guys with me? So this makes sense to you guys here, right? My plan is to keep it simple. Day trade, scalp trade, the strong names, the defensive names, use VXX or puts on when we start selling off or we hit resistance in the markets, and then look for areas when we get oversold and support to try to come in. Michael, TLT, yep, bonds have been strong. TLT has been rocking. Sean, I don't like to touch the VIX because there's no underlying. I can take 1,000 shares of the VXX and rock with that if I want it. And I do that quite often. Just a matter of trading style. Make sense? That's just my trading style. I'll take 1,000 shares of VXX multiple times a day if it's moving in the right direction, and just get in and get out. Make it 100, 200, 300 bucks. Get in, get out, get in, get out, and just put it in my pocket. I'm going to do a course at the end of this month. I'll get some information up soon on that, on how to scalp trade in this market. Sometimes I'm in and out of it in less than a minute. Sometimes it can be 5 minutes. It really just depends on what it's doing. So I'm going to do a course on this. This is not the purpose today. We'll go over that in the next one. Okay. I want to keep it where we are today. But you know, people in my service, they see me do it all the time. I did it all day, all week this week. You know, here, I'll share it with you if you guys want. I'll take a quick break. See if I can get this without getting myself in trouble. All right. So quick trades, in, out, in, out, in, out, in, out, in, out. That's what I did. That's what it looks like. All right. In, out, in, out, in, out. Just put trades, put money in my pocket, and that's my plan right now, guys. A scalp trade is where I don't stay in it long. I'm usually in it for I usually have a dollar figure I want to make, and once I hit it, I'm putting a stop right next to it or jettisoning out of the trade. I'm not letting it go against me. I'm looking to catch momentum or move in the right direction. Right? Obviously, red trades were losers. I use common a lot of times, but you can use in the money or at the money options to do the same exact thing. We'll go over that later on. Thanks, Sean. They were quick trades, right? It is what it is. You got to adjust to the market, and that's what I've done. I've adjusted to finding ways to put money in my pocket without leaving a lot of risk on right now. All right, so back to here. Continued. Got to watch the news, right? Still looking for China plays, right? I did a webinar back in November on this, and you can go watch that. It's on my YouTube site. They're still in play. Nothing. They never triggered. There was never a reason to get in them yet, but that whole trade is still waiting for us. Don, they were mostly 1,000. Sometimes they're 500. Depends upon the stock. Anything over 100 is typically 500, and if I'm not sure, I'll trade down to smaller lots. Sometimes I'll even do 200 or 300 lots, depending upon what it is. Or if I do a name like Tesla, I may do 100 or 200 lots. But a name like Tesla can move $5 in 5 minutes. All right. So watch China, watch the news. The one thing, guys, I really don't know right now is if impeachment talk heats up, I don't know what the market's going to react to it. Had you asked me a year ago, I would have said the market would have thrown an absolute fit. I don't know here. I don't know if the market how it's going to react, so I need to throw that out there that I really don't have a clue how the market will react if that comes to bear. So just be aware of that. It's a big unknown for me out there right now. Okay? As I look forward, I'm going to look for the call buyers to show up. They've been on strike for the last month plus. So for the most part, I'm keeping my powder dry, so I'm ready for when they come in, right? Sitting in my large account and mostly cash, my day trading account and trading is all cash and going home with very little risk at night, if any, most nights, and waiting for them to come in and say they want to own this market. And the most important thing you need to have right now, guys, is you need to have a shopping list for when you think we have bottomed. So why is it important, right? Why is it important to have that? You know, Pam, I do think you could look at the Clinton impeachment and Nixon resigning as well, but I don't know if this market's gotten tired of this president or not and would like a change or not. And I think that's where I come from my uncertainty. Does that make sense? A year ago, this market loved him. I don't know if where it is here with him at this point. And that's not taking politics. That's talk. I'm just talking about what the market thinks of him, and I don't know. All right, you do have to have, no matter what right now. So my advice to you guys today, the next 4 days is to make yourself a shopping list. Have it written down, have it somewhere in front of you, so that if you get a turn, you know what you want to do. You should, even if you're going to buy leaps or long-term options, you should have it written out what you're looking at. So if you like Square, right? You know I love Square. It's one of my favorite names to trade. And you want to get into it, and you don't want to buy common, you're buying options. You should say, I'm going to look to buy this expiration and this far out of the money, right? Absolutely should be doing that, right? So you should have your ideas. You should have them written down, print them out, put them in front of you, so that when you think you're seeing that, you can go start buying. Now, that doesn't mean you go buy everything at once, right? You don't buy everything all at once, just in case, right? So this is my plan, guys, for this year, right? Going into this year, I'm going to stay tactical until the market gives me a reason to not be tactical. And when it gives me that reason, I'm going to deploy. I'm going to have my shopping list ready. If you loved Square at 100, you got to love it down here at 50, right? If you loved Apple at 230, looks a hell of a lot nicer in the 150s, right? If you like those names. I'm not saying that I'm saying here, but you could do some married puts. You could also, I've done a webinar a couple times on hedging. Maybe we'll revisit that again in this month, is how to hedge at this point if things go bad. What to look for hedges if you start doing this, right? So a lot of things going on here. All right. Any questions on what I've covered so far? Does this help you guys, give you an idea of what I'm thinking about here moving forward? I'm glad you like it. Thank you, guys. Appreciate that. All right. So let's go into sentiment and look what we're looking here. If you have a small account, you make a list, but you're buying one or two options per name, depending upon the cost of the options carry. You're keeping it small. So you want to go out there and find names that cost maybe 5 or 10% of your account max into any name. Don, both. I don't know how. I still have some exposure to pot stocks. I'm very less exposed here, Michael, on them. I think they've had their move already, but I'm keeping a close eye on them. I still have some. All right, sentiment. So all this stuff is free, guys. I put this out there because you don't have to go subscribe to anybody to get this stuff. First of all, the fear and greed index, right? We hit 2 the other day. So we've come back up a little bit. We're at 12, but we've been in extreme fear now for the last couple months. So, the market's telling us people are still unhappy. There's a lot of fear. Sentiment is just nasty in this market. Well, we knew that, but it's always good to have a look to see if it's starting to turn. Stock Twitch sentiment. I love this because this shows you what retail is thinking, right? And when I say retail, I mean you and me, not the big funds. And what you can see here on the SPYs in the last week, look at the sentiment rising on all of these. Look at the IWM. Even though the IWM hasn't moved much, look on the bottom right. Sentiment is back to 60% bullish now after diving down to about 30%. This is a big, big move here for something that's not moving much. This is interesting, right? This is interesting that sentiment's getting, to me, retail is getting very, very bullish here on the indexes. Usually when they get too bullish, they come in, they smack them down. So in this case, they're kind of front running the market here. Does that make sense? So I haven't seen this in a while. So this is something different. It's something to keep an eye on. The oscillators. You guys know I love looking at the oscillators. All right. We came in and got a beautiful oversold signal on the oscillator coming into this week at negative 320. You can see now we're all the way back to 29. We went all the way back to neutral in 3 days. It took them 3 days to take this market from extremely oversold to neutral on not a huge bounce. Can you guys see that? Same thing on the NAMOT. They did the same thing here. This tracks the NASDAQ. You can see again this huge bounce back up the last 3 days, right? So we've already gone from a nice oversold signal back to neutral. Neutral doesn't mean we have to sell, but it just shows you that we are already back up in that area here. SPY. So we've talked about it. I did a webinar on why I thought we would bounce for you guys the week before Christmas, Thursday before Christmas, a week and a half ago. And we finally got it. And here, look at RSI. Look at the RSI bounce here. You can see how we sold off straight down for 10 days in a row. And now we've had basically 2 up days. Okay? 2 up days in this market. So when I look at this right now on a daily chart, we were overdue for this bounce, right? Now, is this bounce going to be the bounce that brings us all the way back up? I don't know. I tend to think probably not unless there's news, but we'll see. And that's buoyed on the fact that there was no real option buying into this all week long, right? And the one thing is, I use standard settings on RSI, Michael, here. That's just the standard setting. This way people don't get confused, all right? I will tell you this, looking at this chart, if the market wanted to get frisky and shake out a lot of shorts, where would it retest before it broke down? And this is a big if, guys. Where would the market retest on this chart before it broke down? AS has got it. 260, Tony, 261. Right? Nope, 21 EMA, I think it goes through it, Don, in this case. It tests where we broke down from, that 260 area. Like when we break above something and retest it, right? When the stock's at resistance, like here, if you look at this chart in the SPY, when we first broke out above that 280 area, right? That blue line, and then we came back and we held it, it said that is support. That's bullish. This would be the same thing. Retesting the breakdown and failing would be bearish for this market. We'll see. I don't know if we get there. Honestly, yesterday's candle, not a happy candle. To me, yesterday was a scary day that I figured they would try to squeeze everybody into the weekend. And, they wanted nothing to do with here. Definitely harder going up. The VIX. Very, very simple on the VIX. One thing I've been telling you guys forever, when you explode out of the Bollinger Bands, look for reversions. You see how it likes to do that? It doesn't mean it's move over. It means it likes to revert. Right now, 26 is the level I'm watching. If we get below and a close below 26, it could be a signal that fear is coming, fear is subsiding, right? 26 is the area we're fighting to break above. So we'll see. We'll see how it handles that maybe on, in the next day or two. We finally gave back the last couple days candles. It took a while before it finally came in. But the VIX is showing, this is this new elevated level that we're going to stay up here. So 26 right now for me into this next couple days is the area to watch. The Q, Apple's been dragging hard on this stock. Looks very, very much like the S&P. Again, not leading here at this point, just kind of hanging out, moving with everything else. And the one that everybody's getting the most bullish on, which is funny, which is the IWM. IWM failed at the 8-day again too. It couldn't even get above it. I'm not sure why everybody thinks the IWM is going to lead us out of here this time. It could, but honestly, I think it's most likely to be the big names at this point. So we'll see. Any questions on sentiment, on where we're at or what we went over? We're kind of in no man's land here, guys. I think the thing I take away from this is that today we are in no man's land, right? Market could go either way here easily. We're no longer oversold. We're no longer extended to the downside. Everything here has changed. Does that make sense? Doesn't mean we cannot continue going higher. It just means that we're no longer out of the Bollinger Bands. We're no longer way off the 8-day. We're still well off the 200-day, but nowhere like we were. So everything's changed. Bonds have been very good. Institutional flow. I'm not sharing any with you today. Do you know why? I don't believe it, any of it. My take on the big flow of late, when I see names like Yelp and QSR and TXN and BSX, is most of it, guys, they're buying way out of the money calls and they're selling stock. They're taking cheap bets in case they were wrong. The other thing I saw a lot of yesterday was something I hadn't seen in a while. I saw a tremendous amount of call selling on names opening. Right? You guys understand what call sellers are, right? That means they're coming in and they're selling premium. They're selling calls to open, not buying them, meaning they're making a bet that the stock is not going to get above that by expiration. Okay? And I saw a lot of that yesterday. And that to me is a flag that they don't think anything's going by. Not following you on that one, Sean. Don't know what you mean by that. The premiums are good, right? Volatility's up. The premiums are good. It's a great time to sell premium up there, these out of the money. But it's also a sign that they don't think we're going to bounce. What you want to see them doing to show that they believe a name is going to go up, what would you want to see? Oh. Okay. I like it, Sean. It works for me. But I have it tuned how I want it. Yeah, that's it, KM. You want to see put selling. Same thing. They're taking the premiums in, high premiums, and they're betting the stock's going up, and they're willing to own it there. That's what I want to see come in here, and we're not seeing it yet. Okay. So, until the close, your charts, guys. We got about 15 minutes. I have a couple things I want to show you. I use stockcharts.com for this to show you guys. By the way, somebody was asking me what I use here. So first off, I want to go and do a couple things real quick. First of all, let's go to the SPY. So we were looking at the daily. I want you to look at the weekly chart here. Grab this. There we go. Okay. Notice here, we stopped at the 200-day on the weekly chart, right? All right, we stopped here. Next areas of support if we break here. And why do I do that? So again, you have to have an idea. 225 is the next area that has some support. Then we're at 220, and then the big one comes in around 213, 212. That's the area we plateaued for, right? During 2015 into the first start of 2016. That was the area where we last had some corrective activity in the markets, right? That was the last time we had something like this. So that's the area to look for to see if they really want to own it there. Make sense? You have to open this up to a weekly chart to start seeing some of this stuff at this point. So what are some symbols you would like me to take a look at today? What are some things you guys want to look at? This is where I tell you to watch the stronger names, right? So make your shopping lists. Go out there. Names that have been showing relative strength, right? Here's one for you. It's run a lot. Microsoft. Thank you, KM. You knew where I was going. Even though it looks weak here, in the grand scheme of things, it's still what for the year? It's still what for the year here, KM? It's still green on the year, right? It's still up well for the year. It's still up nicely on the year, right? Relative strength. We want to look for names that have strength. They'll be the names they're going to want to run to, okay? Somebody brought up Micron. Micron for me, guys, it's a China play. I've got to be very careful with this name right now. I've been saying this. I'll continue to say it. My belief is that the semis are in a cyclical downturn. There's a lot of oversupply out there. I'm being careful with all these. That said, if China comes back and we get a deal, I think that can run. Nike. Nice one to look at. Right? Another one, green on the year. Now, it's lost its momentum in here, right? It's kind of lost its momentum a little bit. Was moving with the SPY, though, but now it's kind of, it's if you notice this pattern, it's very much with the SPY. It's just acting better. It's holding in better. Nike, to me, if the market's turn, this one's probably going to try to move quickly back up and towards that 79 area. This one looks good. That's a nice look there on that one, Stanley. Home Depot. Home Depot has not been good. All right. Home Depot in the retail space, been very, very weak, not acting special. Not a chart that I'd be running to here right now. Okay, Phil, Amazon. This name has been very strong, still green on the year, but gave a ton of it back, right? Gave a lot back at this point. Um, the nice thing about Amazon is, for you guys who love to play it, this thing moves $100 a day now. So if you like the names, you can play this with cheap out of the money options as lottos. We keep talking about that. That said, big doji candle yesterday. Not sure what it wants to do. So we'll have to see. Came in a lot though, right? Gave back a lot off this move. If the market bounces, it'll be one of the strong names still. Google has not been so good. You can see it went red on the year. Still is right at that spot. The market, for whatever reason, they reward Amazon. They do not love Google. I personally love this company, but market doesn't. Jack, Twilio. Twilio's been a rock star in this market, right? This name, look how good it is. They were buying next week's calls yesterday. Lots of them. I don't take any of them. I didn't look at it, but it's something I'd keep on my radar. It's stuck right now back at the breakout level, right? So this is where it broke out from. It's right back below it. If the market's strong, go-to status. I like that one, Jack. Nicely done. You want to talk another semis, Chris? AMD has been acting a lot better than the other names in the semi space. It's still up a lot on the year, right? It's trying to hold in here. It's trying to cling to 16. We've talked about 16 being a big area for it. It's been clinging to it now for a while, trying to hold in here. Acting better than some of the other names in the space, but not really showing much. Not really any powered on its own here at this point. Okay? But in terms of semis, the last couple days, it's been better than the other names, so it had my attention. Make sense? And I just lost my place. Hang on. Amazon, Google, AMD, SMTC. Hello. NVIDIA to me is still in the penalty box. SMTC. Chart's holding in nicely. I don't know anything about these guys. Not a name I would typically trade for me as a day trade because it doesn't trade enough volume. I want at least 1 million shares a day on average. But not a bad looking chart. This is more of a hold if you like the name. I don't know what they do, but the chart looks better than a lot of other stuff out there, Sean. McDonald's, we had puts on that one yesterday. I haven't seen that in a while. Still holding green on the year. Had a big run, came in. Again, a defensive name, acting better than a lot of other ones. I like this name better than a lot of other names out there right now. I'll give you another one nobody's talking about. Disney. Came in a lot, but I love the story there from a long-term perspective. I like what they're doing. So I would keep my eye on Disney here on a big move. I loved it up here. I like it even more back down in the 100 area. Amazon, Lulu, PG, Procter & Gamble, Don. This chart's been just incredible. One of the guys in my service plays it all the time. Incredible, strong name. Acting well, holding up well up here, cooled off. This to me is one of the names I keep an eye on. If the market is going to chop around, I think P&G is good. If we sell off, it's going to get caught up in it, right? The one thing about sell-offs at this point, everything's going to get caught up. But if the market's going to chop around, a name like Procter & Gamble should be the name you should be looking at, right? Put it on a side chart someplace. Gold has been up, and up. A lot of people using that for a safe haven. So trying to pop up here. Broke above the 200-day, nice little continuation. It's got a big gap here if it wants it on that chart. Gold's a very gappy instrument, though. You got to be careful with it. Apple. So Apple here, the daily chart, right? We gave back the whole move. We got into the 140s. Now we're back up towards the 8-day and failed again on the 8-day here. Time check. Let's go to weekly on this one. All right. So right now on a weekly chart, we're kind of in limbo. Not really anywhere. You have a little bit of support here. You have 124 would be very, very strong support in my opinion if we got to it on Apple for you guys looking to play this one. All right. Retest of where it broke out from. They should find some buyers there if it went that far. And that's an if. Right, Don? But again, if we sell off more, that becomes a lot more attractive there. Twitter. Let's talk about Twitter. I love Twitter. Twitter got a complete hatchet job by Citron last week. Perfect storm after the Facebook news, the market selling off. He came in and did a nasty hack job on it. It got dumped hard on him. In fact, we now know he was the one buying puts that morning before he tweeted it out. Gotta love that. I still love this company, guys. It's going to need a little while to recover. You know, this was a nasty hatchet job on it. I still think it tries to come back. As long as it stays above this 26 area, I think it's okay. We'll call it 25, just, 26 here. It stays in the game. It's got to hold 26 at this point. All right? Something to be aware of on Citron, he never, ever, ever holds his shorts to their target. He puts out numbers that he never holds it to. So just be aware. Boeing. Love me some Boeing. All right, not acting good here. Nice bounce. We love this name as a day traded vehicle because it can move so much. The name has big moves on it now, but the chart's not acting special. That said, yesterday, it managed to get to the 21-day before it failed, which was better than most of the names we've been talking about out here. One that nobody's talking about was the one that actually was stronger, CAT. CAT has taken back the 50-day already and held it. I would keep an eye on this name. We saw some decent call buying coming into it on that one. Walmart. Walmart's been beaten up and abused and battered on earnings. A bunch of insider selling that's going on over there. Not acting special to me here at this point. Retail, to me, this is their strong time of year, and they weren't strong is a red flag. What do they have left to be strong about? Their season's over. Deere, same thing, KM. Deere saw a little bit of buying yesterday, acting a lot like CAT. They're moving together. I prefer CAT because it's a little bit more liquid. Let's do Netflix, and then we'll do a hot stock or two real quick. Let's type it right, Michael. Netflix. Okay, Netflix was the first one to start selling off, and it's been weak for a while. We have this gap that it still hasn't quite finished filling down here to 227. Can you see it from all the way back over here? Right? Still not quite there. If the market's weak, this one should push down and be weaker. And again, look at the pattern. Sells off, bounces, sells off, bounces, sells off, bounces. The 21-day is typically what it bounces into before it fails. This is a very typical sell pattern, right? We like when a stock stair steps up like this. There's the stair stepping down. Let's talk CGC first. CGC, in my opinion, is probably one of the better names in the pot space. They're, them and GWPH. This one is not showing any signs of life. The big move is cooled off. It has to hold here support. If this can't hold support, I think they're all going to be in trouble, including, I know everybody loves Tilray. Tilray, again, very low float on this one, moves big and wide. I trade this with Common once in a while at 100 shares. You don't need more than 100 because it can move 10 to 15 bucks at a pop. What you need to be aware of is that this thing has very, very wide spreads. And often, Don, you were asking questions. Often when you buy this on 100 shares, you'll be down 50 or 60 bucks as you're filled. Does that make sense? So you need to be able to put a $2 stop on this when you trade it. and be willing to say on 100 shares, I'm willing to lose at least $200. Otherwise, don't touch it. That makes sense to you? So I try to look for tighter spreads when I spread common, Don, for the most part. That said, I will grab names like Tesla and stuff where they're in play, but that's about it. I never touch a name like Amazon with common. Energy names, can they still be shorted down here? Great question. Energy, I mean, this has just been horrific. Continues to sell off. Another big build on pot stocks again, on oil again on yesterday. I am hoping they come back, but right now every little bounce has been sold off. I would see if it can get a little higher first before shorting it. Look at the RSI. The RSI probably likes to get up a little bit before you short it, right? So if RSI got to 50, I would try it there. I would be careful shorting it down this far unless the market was going in your direction. Does that make sense, Pam? I would like a little bit more of a bounce before I tried it. Guys, I want to thank everybody for joining me today. I want to wish you guys all a very happy, profitable, and healthy new year. No matter what happens, come Wednesday, you start over again. It's a new day for everybody. So no matter how good or how bad your year was this year, it starts over again on Wednesday, right? If you're going to trade this market for now, trade small and be careful. Yeah, Don, Square's tough with us, common. It moves very, very quick. So you got to be careful with that one. Yeah, I agree. Happy New Year, guys. Thanks for joining me today. And I will catch you guys all next year.